General Motors reporting results in the last hour. Phil LeBeau joins us now with a special guest. Hey, Phil.
Hey, Joe, a nice pop for GM shares as the company beat on the top and the bottom line, raised its full-year guidance. Let's bring in Paul Jacobson, CFO of General Motors. Paul, with me setting the table there for you regarding the first quarter, what did the street not appreciate that had you reporting far better than expected profits?
Well, good morning, Phil. And first of all, thanks for having us. It's a great day here at General Motors, and I just want to give a great shout out and a thanks to the team for delivering great results. You know, when we came into the year, I think we had a pretty good setup. And while we provided our guidance and said, you know, we built in an assumption of pricing being down 2 to 2.5% throughout the year, we managed to keep pricing relatively constant. And that is really in response to the great demand that we have for our high quality vehicles. So really excited about the momentum we continue to carry.
Yeah, average transaction prices up around 50,000. Clearly, internal combustion engine driving your business, but you're ramping up your production of EV cells as well as EVs overall. No hesitancy given what we're seeing in the market right now and the slowdown in demand for electric vehicles?
You know, we've actually seen probably a little bit more strength in the retail side of EVs than I think what most of the data indicates. You know, our retail EVs were up about 21% year over year, and that's despite the Bolt being down 60% as we sunset production of the past generation and working on the next generation. So obviously we've seen some fleet and softness, particularly around rentals, but the retail customer's holding up. And as we look at the Cadillac Lyriq and the Equinox EV, the Blazer EV, the suite of products that we have coming to market, we think that we can meet customer expectations where they are. But at the end of the day, we've also got a really, really strong ICE franchise, and you've seen that across the board. While ATPs were down slightly in the quarter, that was really primarily mix because we saw the Chevy Trax, for example, which has an MSRP starting just above $20,000. Sales were up 500% year over year. So when you look at the truck franchise, it's holding in there really strong, and our ATPs in April are trending slightly higher than where we left the quarter in Q1.
Paul, is there any change in the consumer behavior in terms of the cadence for how often they're replacing a vehicle? When you look at auto loan interest rates north of 7% on average for a new vehicle?
Yeah, I think it's a little bit too soon to tell on the loan portfolio. We have seen, some effects on lease rates and the leasing portfolio, obviously, where people turn vehicles faster and where we drive a lot of loyalty. GM Financial has continued to trend well in that space. So I think it's a little bit too soon to tell based on where interest rates are and how long they've been here. But as we've seen, the customer has been really resilient as it relates to our products over this time period.
Paul, you lost $106 million in China last quarter. That was a business at one point, it was a profit driver for General Motors. But given the market over there right now overall, and especially when it comes to price cuts, when it's electric vehicles, and that's also filtering into the ICE part of the industry as well, what's your outlook when you look at China this year?
Well, China did lose money in the quarter, and we forecasted that on our last earnings call. It actually performed a little bit better than what we expected going into the quarter. As we talked about, we had some pretty significant inventory we needed to work through that was carried over from year end. We've been able to do that, and as we said back on our prior quarter call, we think it's going to turn to profit this quarter, and certainly the trend lines indicate that. So we expect a year similar to last year. It's certainly not what it used to be, but the team is doing a really good job of managing costs and being disciplined in market where we can. So we're continuing to do that. We've got some really good sort of premium products coming, as well as some PHEVs coming into that market. So we think that we can stabilize and get back on the road to improving profitability there.